Morning, guys, and welcome. We are just going to run through the charts this morning briefly, just to do an analysis based on the kind of stuff that we're talking about last week. I'm not going to get into anything strategy specific. I'm going to leave that to you to, basically join the ability to evaluate a chart to identify where we're at in that market's life cycle. With the particular selection criteria for any one strategy. Now, obviously, I'm trying to keep the strategy independent. So I'm not going to talk about any specific strategies, particularly also because in the challenge, I'm hoping that people are going to, there are certainly a lot of people who are bringing their own strategies to the table. And I don't want to make it seem partisan in any kind of way. All right, so this will also be, it is being recorded, so we will put it up in the group. So you'll be able to look at it again. If you do have any questions for me, do pop them into the chat box specifically, and I'll see if I can just address those at the end. Otherwise, if anything occurs to you and if you're watching the recording, please put your questions in the comments below this. All right, so I'm just going to go all the way back to EURUSD. We'll come back to that. Starting at the top. Now, what I'm going to be looking at here is to identify whether we are in a potential range or a potential trend. We've obviously had a lot of consolidation taking place leading up to the US elections last week, obviously, because the results have been so protracted and coming out for all those reasons, as well as the fact that last week Friday was non-farm payroll. It is quite a sensitive time at the moment as well in terms of looking to see if the US economy is in fact improving and the effects of COVID, etc. So we're not surprised by the fact that there has been some consolidation. But having said that, we also have noticed that there have been a couple of turnarounds last week and a few breakouts as well. So let's just run through the charts and look at what we look at to trade for ranging strategies and what we would look at to trade with trending strategies on both the weekly and daily time frame. So EURUSD, we are very much in a sideways market on a weekly, so not interested in any trending strategies there. On the daily time frame, likewise, you can see that the market has been nicely constrained, certainly since we had that false breakout in September. And the market basically has remained within that range up until now. Yesterday, we tested the upper boundary of that range. We may well be having a breakout, but it could also respect that. We don't know. We don't try to pretend that we can know, so we just wait to see what the market tells us. Even if it does break out, remember, it could lead to being a false breakout. We're not too worried about that. We simply then have to, all we have to do is apply the selection criteria of our strategies. And once those selection criteria are met, we go to timing, and from timing to management through to the end of the trade. All right, so moving on to GBPUSD. Make sure, yep. Good. Okay, so on the cable, a little bit more chaotic than the euro, but still, likewise, similar kind of picture in many ways. The cable tends to, even though there is correlation between the euro and the cable, and you can see some of that here, it tends to be a bit more aggressive in its movement. In any case, we are also seeing the market having been constrained for quite some time. Likewise, as with the euro, today potentially we might have a channel breakout. So that's on the daily. On the weekly, also very much constrained in a sideways market. Right, so here we have our first breakout on the daily time frame, of course. So that dollar weakness showing itself here on the dollar yen. We did have a breakout last week Thursday. Of course, Friday's non-farm payroll. So basically, this is a good setup for any lower time frame continuation strategies or trend continuation strategies and impulse strategies. So those of you who are trading H4 impulse should be looking at this, of course, but nothing yet. And in fact, if you were going to trade on non-farm payroll Friday, then you would have actually been looking from first thing in the morning on Friday. On the weekly time frame, likewise, we had that the last week close outside of our channel, so a bearish breakout. And you'd be looking as well for your impulse candle if you wanted to trade daily impulse. So I'm breaking my rule about not talking strategies. In any case, you can see that this pair is certainly appropriate for looking at trending strategies on both the daily and lower time frame. So using the weekly as selection time frame all the way down, looking very promising. Dollar Swiss, another channel breakout on daily. Let's just go to weekly first. You can see on weekly on Friday, it certainly tested the bottom boundary. It could easily continue through the course of this week. So we may well have a breakout here as well. Today is going to be quite crucial for us to see that. And you're actually seeing the Swiss franc strength over here as well, relative to the dollar. It's with that one, just as with the Kiwi, as you'll see, we've got the New Zealand dollar and the Swiss franc are pretty strong at the moment, and the dollar is certainly very weak. So yeah, I mean, and then obviously on the daily time frame, we have had a breakout. We had it for impulse strategies. The breakout already took place on Thursday's close, and then for continuation entries, we saw Friday as well. So let's wait and see. I've been taking it easy, just not looking to expose myself to any major risk through last week, but looking at these markets now with this dollar weakness, looks like we might be seeing the start of some sustained directional bias, which would be nice for us to trade. Okay, same thing with USDCAD on the weekly time frame, similar picture as you can see to dollar Swiss, testing that bottom boundary. Let's wait and see. However, on the daily, we've had that channel breakout, both on the 3 and 4 wave historical Donchian channels, which is quite nice. We don't have a valid M pattern here for this bearish market, not yet anyway, but certainly for channel breakout traders, we do have that. Right, Aussie, bullish breakout, showing that dollar weakness again. On daily time frame, we certainly still constrained, however, on the weekly time frame. So nothing there, but certainly on daily channel breakout, no valid W pattern either. Our C close would need to be above X, and clearly it's not. But certainly we've got a channel breakout here for the obviously looking here at the for continuation entries. When it comes to the impulse strategies, however, you'll notice we haven't had a breakout on that as yet. The Kiwi, however, is a slightly different story. You can see the strength in the New Zealand dollar here. We haven't yet had an outside close above these higher resistance levels, but certainly our 3 and 4 wave channels were broken out of last week, Thursday. Nice outside close. So you guys should be looking at that directional bias over there. No W pattern either, but yeah, very strong channel breakout, no question about it. Weekly time frame as well, you can see that last week it failed to close outside of our channel. So we need to give it a chance this week to see if it does that. And certainly if we continue to see this bullish movement on daily, allowing us to trade nicely on the lower time frames like the 4 and 1 hour, then certainly we will have that outside close at the end of. All right, so those, obviously that's the end of our majors and minors, with the US dollar being the main currency affecting those with its weakness. Looking at the yen pairs, you'll see also in the lead up to the elections, we had some sort of movement, but it's turned out to be somewhat false. So here on Euro Yen, at the moment, we do have potentially a valid M pattern forming, with our potential C still outside our potential X, which will be this point over here. We've also had a breakout of our, for our impulse strategies of the 4 wave channel. So as long as this resistance level continues to be respected, if we have reason to believe that this retracement wave is over, then clearly we can look to continue trading this in a bearish direction. So bearish breakout of that channel, potentially a valid M pattern as well, should we not have an inside C close above point X. It'd be really nice if it doesn't close inside this channel either, of course, but it failed to respect this support term resistance level. Again, this could easily just continue going up, but we don't second guess the market. We're going to just wait and see. Let me just look at weekly quickly as well for you. Unfortunately, we didn't get a valid M pattern here, as you already know. Looking back about a month, we had that inside C close. But yeah, you can still see that this bearish cyclicity has started forming with lower highs and lower lows. But we've had the inside closes over there, unfortunately. This has shown itself to be a valid bearish impulse wave on weekly. We've got this inside bar last week. As soon as if we get a higher high over here in the next day or so, of course, that will indicate that that low is therefore effectively ringed. It'll invalidate this inside bar, which will mean end of this bearish impulse wave. However, this could still roll over. Remember what we do with inside bars, we treat it as if the wave that we were in is continuing. So let's wait and see what happens there. Right, GBP yen. Let's just go to weekly first. Completely constrained, nothing of interest there at all by comparison to what we've just looked at. And same thing on daily. This is just absolutely sideways. So of course, if you're trading harmonic patterns, there was actually a setup some time ago, obviously, but for those of you harmonic traders, you will have spotted that. But this is a perfect environment for looking for harmonic patterns. With that very high close up here with our B point, this invalidated this as any tradable harmonic pattern for me. It might end up being a butterfly, but that would tend to indicate a bullish breakout. So we don't trade against the trends. But yeah, this is still very much a constrained market. So ranging strategy is fine. Okay, Swiss yen, same thing on. We're not interested in that at all. From a trending point of view, we did have this breakout some months ago, but we've had a breakdown in sequentiality over there, so very much going sideways. So if you're trading higher time frame ranging strategies, this might be of interest to you. This preceding resistance turn support level is kind of being respected over here. Then on daily, of course, we've got a bit of a false breakout that took place over here. It's pulled straight back inside of that channel, but it is a potentially valid M pattern. So for those of you trading WM patterns, once this wave comes to an end, as long as we don't have a close above this point, it would be a valid M pattern. But it's testing that level now, as you can see. But yeah, I mean, for now, I wouldn't be looking at this really with any interest at all. But if we do get an outside C close with the end of this wave, then we could start looking to trade this in a bearish direction. Not much strength in these, though, as you can see. All right, so CAD yen, likewise, look at weekly, absolutely nothing of interest there. For trending strategies, CAD yen on the daily is also, there's no valid pattern here at all for us. We had a false breakout. It's pulled straight back inside of this channel over here. It sort of temporarily broke this preceding support level, but that meant nothing, as you can see, showing very significant weakness in this market. It's not bullish yet, but it's only slightly bearish, and that's not really tradable. All right, so guys, for those of you who've just arrived, I'm just running through all of the pairs, just showing you how I would actually analyze them for whether we are in a potential range or a potential trend. And from that, depending on what strategy you're trading, you'd be able to better assess the market conditions for those strategies or assess the selection criteria for those strategies. So really, I'm just trying to apply some of the principles that we spoke about in the training last week. All right, Aussie yen, likewise, look at that false breakout. I mean, we've got impulse followed by impulse wave, or phase one for those of you who use that terminology. Yeah, I mean, that's it's just a sign of the times, isn't it? On weekly, however, we do have this bearish cyclicity showing itself with lower highs and lower lows. That was a bearish impulse wave, but it came to a very sudden halt last week, and it closed back inside the preceding retracement wave. So regardless of anything else, you know, this is showing significant weakness. And remember, we're not using this to try and predict what's going to happen next. It's just to identify whether conditions are appropriate for particular strategies or not. Yeah, so nothing of interest for us there. Right, so New Zealand dollar strength again showing itself a bit more compared to Aussie yen. Here on the daily time frame, very messy last week, testing this resistance level, tested it last week, Wednesday I think it was, testing it again today. We just need to wait and see. But yeah, after that false bearish breakout, you know, we're looking at a lot more sort of bullish momentum here, but until it gets above this preceding resistance level, it means nothing. Right, so here on the weekly, you'll see likewise, very much constrained, nothing of interest at all for a trend trader, but this is a potential Bat-Gartley pattern on weekly for those of you who are trading harmonics. Right, EURGBP, these have all been very choppy, these highly correlated pairs. You know, here on daily, it's just been a mess now for a long time. I'm not really interested in anything there at all, despite this general bearish sinking of the euro compared to the pound, which is the same as this move on the weekly. So nothing of interest here either. So we're just leaving that one alone. It's not really something I would want to trade either, a trending or a ranging strategy on. Likewise with EUROSwiss, we expect this choppy sideways movement. Again, you're seeing a general weakness in the euro compared to this trading partner being the Swiss franc. So yeah, that's an observation. It's not something, doesn't make it tradable, that's for sure. And you can see it here on the weekly time frame as well. So yeah, I wouldn't touch that with anything. I generally don't trade the Euro Swiss franc either. Okay, I'm just running through the currency pairs at the moment. I'll get to that in a second. We're focusing here today on just a market review, just looking at trending versus ranging. All right, so EURCAD. Here we again can see that this support level was respected despite that marginal outside close. Certainly has continued to respect this area as a support level. That's EURCAD on daily, and here on weekly likewise, you know, there's nothing of interest. Again, you can see just a slight general weakness in the euro compared to these other trading partners. Okay, so Euro Aussie, likewise, there we have that bearish breakout again last week Thursday, with Friday coming back up again. So yeah, a bit of a sort of a disappointment, I guess. You know, now that non-farm payrolls is finished and US elections seem to be panning out, although you never know what's going to happen that side, unless there's some sort of big change in the results for whatever reason. All these conspiracy theories running around, then you know, we shouldn't see too much changing. But again, we don't try to predict these things. Anything can happen, and it's very important to always be ready for that. But we did have this inside close again on Friday, which kind of disqualifies this for us for now. Having said that, this is still a bearish wave. So until we get a ringed low, I mean, if this inside bar were to close outside of the channel again today, then certainly a lower time frame bearish trade may well be called for, using this higher time frame to help with that identify that directional bias. And weekly as well, you can see we've had this resistance level tested. but it's fallen straight back in again. So nothing doing there either. Euro NZD, we here have seen the Kiwi strength showing itself. We've noted that the euro is showing some weakness, not as much as the dollar, of course, but the New Zealand dollar is one of the strongest currencies around at the moment. And here on daily, you can see the effect of that, where we had the bearish breakout of our 4-wave channel. That's already happened. And then we unfortunately had an inside close. It closed inside of X again and inside of the channel, but it's rolled over again, broken out of first our 4-wave channel, and then of course last week it broke out of the 3-wave channel as well. So yeah, overall bearish, but again, because of last week's very choppy behavior, it's, you know, there wasn't much doing there. But you know, if we get a candle like we're looking at right now, which is an inside bar, you know, that's potentially a bearish setup on the higher time frame. You just need to drop down to the lower time frames for your executions and your lower time frame selection criteria. So on weekly, likewise, still very much inside of the channel. You know, we've had a support level over here, this sort of more minor support level, or recent support level over here being respected. Let's see what happens this week. All right, so yeah, but during the course of this week, this may well be something that you could look to trade in a bearish direction with your lower time frame strategies. GBP Swiss, totally constrained, as you can see. Both GBP and Swiss franc showing some relative strength over time, but you know, highly correlated movement over there. GBP CAD, also absolute chaos here. Not interested in this at all. Certainly not for trending strategies, and the weekly higher time frame kind of just backs that up, doesn't it? So very clearly. GBP Aussie. Here you can see this is a harmonic pattern for those of you who are trading those. Certainly, it's basically a bullish bat, but it's definitely not a trending market, is it? So we're not only constrained by our channels, we don't have a valid M pattern. Certainly, it's the only thing we could possibly look for right now. However, if we do get a retracement over here with a respecting of this will be a future X. So this future X point, if that gets respected by our future C closes in this retracement wave, and we do get it rolling over, then we would have a valid bearish M. All M patterns are bearish, though, of course. So GBPNZD. So here you can see that the NZD is stronger than the pound, even though they're both showing relative strength against many of their other counterparts. Weekly time frame, nothing, of course. It is actually a bullish bat on weekly potential setup here, which means it's ranging. That's a ranging strategy. Daily, likewise, it's respected these support levels quite nicely through the course of last week, as you can see, Wednesday, Thursday, and Friday. But who knows, maybe we'll have a breakout here in a bearish direction today on this. And using this as our higher time frame, selection time frame, you know, then certainly we could drop down to the lower time frames for final evaluation of selection criteria and execution. Right, CAD Swiss, horrible, absolutely horrible. There was a cipher pattern in here which is rolled over. That should have hit target 1, but again, that's a ranging strategy. Very much sideways on weekly time frame. Not interested at all, unless you're a range trader or reversion to the mean trader. On Aussie Swiss, likewise, you know, we have a potential W pattern here, with this being our potential X. If we get our future C close above this future X, then we have a potential W pattern to trade this in the bullish direction, even if it's still inside of that channel. But likewise on weekly, you can see we had this false breakout over here. It's not yet a false breakout because we haven't yet had that breakdown in cyclicity. Nevertheless, you know, that's shown significant weakness with the inside close last week on this time frame, which of course was this bullish impulse wave on daily. Aussie CAD. Likewise, you can see that all of these they're not even minors, these sort of more exotic, well, not even exotic, but arbitrary currency pairs, they're just kind of chopping around, either showing a little bit of strength, a little bit of weakness, but overall nothing to write home about. So yeah, I mean, this would also be a potential bearish back for our harmonic traders. Aussie Kiwi, this one we did have quite a nice bearish run for lower time frame trading. I think Johan and I were talking about this last week, was it, Johan, or the week before? And quite a few, like for us, H4 impulse trades in there. We had a couple of winners, a couple of losers, but you made money, and that's the main thing. Unfortunately, and as we were discussing, Johan, as well, we did get that inside close again, didn't we? Inside the channel, but it's from the point of view, I actually just need to move this, it's in the wrong place. The point of view of this support level, it just managed to respect what was support resistance level. This is an X resistance level, looking at our, excuse me, our X ABCD patterns. So this now is certainly a potential valid M, and in fact, I would even have looked for a setup for this with this bearish inside bar, with a close outside of that. If you're trading the MW patterns, then this morning, this was a setup. Again, I'm falling back into talking strategy here, and I said I wouldn't, but I can't resist most of the time anyway. So this over here is a perfect little setup, nice bearish impulse, stop above previous high. You should be in this already, and away you go. So that was a nice little one. Kiwi Swiss, yeah, see how the New Zealand dollar again is showing that strength. Friday it rolled over and came back inside. Looks temporary. So, you know, remember, we don't have an isolated high here, although this may well be a single candle wave, Friday's candle. But even then, you know, if we continue to get this bullish movement, it's looking a little bit more promising. But, you know, even then, if you look on a weekly, you can see that this has really just been messing around for quite some time. So it's certainly not one of our more attractive pairs to trade. Likewise, in Kiwi CAD, you can see how it has continued to respect these resistance levels through the course of last week. However, let's see what happens now. You know, as I said, New Zealand dollar showing some real strength, but still constrained over there. We did have a valid W pattern over here. So although, you know, if you were trading through last week, then perhaps that might not have been what you'd want to have done. But you know, if you were trading last week and ignoring all the news and so on, this would be an example of how even from the 5th, you could have been looking to set up a lower time frame entry to go long on that. Weekly, very choppy. So our daily trending strategies, there's nothing really showing, as you can see, very little, except I think we spotted the USDJPY right in the beginning. Let's just have a quick look at gold. So I did promise I'd try and keep this to half an hour. Gold, obviously, we did get a nice bullish breakout. Certainly, let's just look at weekly first, though, where nothing's happening, going sideways. But on daily, you know, this breakdown and bearish cyclicity, also looking very much like a retracement wave for the higher time frame. And now, for the first time last week, Thursday, this bullish breakout. So, you know, that would lead you to drop down to the H4. And on the H4 time frame, you know, again, talking strategy again, you would have gotten in, I think, at the close of this candle on Friday, which is the 9 a.m. candle, the last one for Friday, be in original stop below the last low. You would have trailed this already somewhat. So 1, 2, 3, 4, 5, 6. Yeah. So there you go. Looking at standard targeting or advanced targeting, that would be up to you. But in any case, the main thing, folks, is not the strategy I'm talking about, is the fact that we have seen this bullish breakout. Do we know for sure that this means that the market's going to carry on going? No, we don't. We don't try to predict that. However, it is a consistent sign of directional bias, in this case, bullish directional bias for gold and bearish for the US dollar, which again is showing its weakness. All right, so I'm just going to look at those. Moon has asked me to talk about the ATR. Well, quite frankly, I just use the 21-day ATR for daily timeframes and 13. I try to remember to use the 13-day ATR for weekly, and that's it. I don't really mind what the instrument is, to be honest with you. So it's not instrument dependent specifically in terms of which one I use. The ATR obviously helps us for setting targets, but it's also very useful in terms of measuring where we are at with market volatility. You know, the lower the market volatility, the more difficult it is to make money. Our least profitable periods are absolutely 100% correlated to low ATR levels across the markets. And likewise, our most profitable periods are correlated to high ATR levels across the market. So yeah, we're always looking for nice volatility and preferably directional volatility. Otherwise, you just have very choppy markets. But yeah, that's really what we'd use the ATR for. And as I say, 21-day for daily and 13 for the weekly. And if you want to use it on the 4-hour, then I like to use a 30 ATR. You can actually use 34, of course, if you want to stay consistent with the Fibonacci sequence. Any other questions, guys? Again, this recording will be uploaded. So if you have questions and you want to pop it into the comments in the group, please feel free to do so, and I'll answer it then. If it's something that I feel bears further discussion, then I'll talk about it in one of our additional training sessions through the course of this week. So I do intend holding a training session on, well, tomorrow evening, being Tuesday, the 10th. And yeah, so look out for the announcement, please, in the group, and we'll go from there. It'll probably be 7 p.m. Central African time. Right. Any other questions, guys? Did that answer your question, Mila? Hopefully you can see that what I've tried to do today is just show you how to actually implement some of the theory that we discussed in our training from last week. You know, probably one of the most popular questions I have received from people, certainly since we launched the strategy training for the daily impulse, the free trading there, is, well, you know, how do I actually evaluate those selection criteria and therefore select appropriate market conditions? And the answer to that is, well, through technical analysis. But we use advanced price action technical analysis, which is unfortunately not something I can just teach in a very short course. I can show you, however, the principles behind what we do, and then, you know, applying some common sense would be, you know, is probably really important. And obviously, common sense in trading comes from a bit more experience. But yeah, it's being able to identify whether you have a directional bias or not is the key. So if you're constrained by range boundaries compared to whether you've had a breakout of those range boundaries, really is an absolutely essential question, especially for us price action traders. Okay, so Muna just clarified. In terms of the number of decimals, right? Okay, so I suggest what you do is you, if you go and you look in your market watch, so let me just give you a clue here. If we start off with EURUSD, you right click on any point in the market watch, and if you drop down to specification, and where it says digits, which is the second row under specification, it says 5. So 5 digits basically means that pips is at the 4th decimal, because we are working to tenths of a pip. So the pips would be at the 4th decimal on this one. So that's obviously a non-yen currency pair. So if we go to a yen currency pair, we'd expect that to say 3, because we know pips are at the 2nd decimal, and there it is, it says 3. So generally, likewise, Now this is broker dependent. Okay, it is unfortunately broker dependent when you move away from currencies. But if you look at gold, for instance, it says 2, which tells you that pips is at the first decimal. And then if we were to go to the Dow, pips should be on the 0. So yeah, okay, so 0.1 basically would be where your pips is as well, similar to gold. S&P should be on the number itself. No, it's also showing 2, so that's fine. ZAR, cotton, let's have a look at some of our commodities. So cotton is the same as a normal currency pair. So that basically should help you with that. Hopefully that answers that question. All right. Yeah, so use the tools that you have. The platform is quite good with that. You'll also notice that if you're using the position size calculator that you guys who are our members get in the back office, then you'll notice that it actually shows you that as well. Awesome. Good. All right, guys. So if there's no other questions, or if there are more, then please just put them into a comment when I post this recording, and I'll answer it, as I say, then or when I chat to you again in another trading session. All right, guys. So enjoy the week's trading. Good luck. Remember, always manage downside first. Let upside look after itself. Apply that convex optionality curve, and you'll be A-OK. God bless. Chat to you later. Bye for now.